Hi, Matthew. Thank you for joining us. How are you doing?
It's a pleasure to be here, Jake. Always great to be on the other side of the microphone and being asked some questions rather than asking the questions.
Yeah. I bet a nice change of pace for you. I imagine many listeners will have an idea, but could you give us a quick introduction to yourself, your background, and Instech as well, if you could?
Sure. So I just did the maths, and I've been involved or started being involved in catastrophe modeling 33 years ago. Talk a bit about that as we go, because some quite interesting lessons for use of technology today. So for those not familiar with that, as building models for hurricanes, earthquakes, and extreme events. And then 10 years ago, we launched Instech, and Instech, we've been delighted actually to work with Cytora, other scale-up startup companies and insurers, just basically bringing together the world of technology and particularly what's new and innovative in technology with the global insurance world. And we were acquired earlier this year, so now I've got a global footprint under a company called Datos Insights. So it means we are expanding what we've been doing in London and digitally to sort of more with the US market.
Great, yeah. So significant background in catastrophe modeling and Instech, as you say, for the last decade has been bringing news and developments of the insurance industry and insurtech industry to insurance. You mentioned some learnings from your background in catastrophe modeling that the insurance industry could benefit from, I guess, when it comes to evaluating and buying technologies. Could you share a few of those, please?
Yeah, certainly. I mean, the first one, frankly, is when looking at companies out there, and I didn't mention, but I also have done some angel investing in the past. Looking at companies that have started up and understanding what they're doing. Yeah, it's really helpful to understand what difference do they really make. Sometimes I talk about if you're number 11 on the top 10 list of your clients' to-do list, you're not really going to get any. You're really going to struggle to grow. And so, the benefits back when companies were adopting modeling was they immediately got opportunities to address regulatory requirements because they had to demonstrate they had enough capital, and they could also buy more reinsurance more cheaply, and they could also write more business. So there's some very compelling reasons. So one of the sort of takeaways from that and lessons is you're looking at new companies, looking at technology, is really understanding why bother or why should the clients care. That's the first one. I can give a few more if it's useful, Jake.
Brill, thank you. It seems like there was a necessity driven from what I hear in catastrophe modeling, and we're at a similar kind of inflection point at the minute where new technologies are really kind of building competitive differentiation opportunities between different carriers and insurance companies. So there's a real necessity to adopt technology at the minute. When you look at the current landscape of AI adoption, do you see a linear path to harnessing LLM-driven solutions? Or are there different ways this technology is entering businesses?
Well, I'd say, the reality is, if you look around at other technologies, and example that we can use for lots of reasons, but is very relevant here is the iPhone, which came out in 2007, and the iPad shortly afterwards. And you look at how telephones have been, or mobile phones have been evolving before that. We kind of did have a step change when the iPhone came out in terms of the sort of multi-platform abilities of it. And most people these days hardly use it for making phone calls. And whilst the technology by necessity has to evolve in a somewhat linear way in the background, because ultimately individuals are learning and testing, you do get breakthroughs that sort of drive that big step change. And in particular from the individuals, people move from having to struggle for change, learn things differently, to actually not even noticing there's been a change because it all happens in the background. A great example that I think illustrates this really well is by Andy Yeoman, who many people will know, founder and CEO, who describes it as a bit like if you take someone's typewriter, it's going back a while, and want to replace it with something they're still going to use but is much more effective. You give them a keyboard with a computer. They're still using a QWERTY keyboard. The technology is a lot better, and for me, that's the sort of the sort of evolutionary change happens. But actually, the real step change is when you switch out the typewriter for the keyboard.
Yeah, it's not like we're implementing a technology that is already in its end state. We'll implement a technology that has a step change, and then that technology will grow with us as we kind of better understand its capabilities and how it fits into our day-to-day goals.
Just another example, just to your point, is if you look at Google, the interface for Google now, that's really no different. I was around when Google pretty much first came out 30, 40 years ago. It looks almost exactly the same. But of course, we all know in the background, it's all changing. And as you think about the use of generative AI, ChatGPT came out 3 years ago now. again, it looks pretty similar, but we shouldn't be deceived just because the interface looks the same. It doesn't mean what's going on in the background hasn't changed quite significantly.
Yeah, the way we interact with the output can often kind of remain quite consistent, but the capabilities of what's going on in the background really can change. And there's a conversation around headless and callless systems, I think, that kind of plays quite nicely into that. We believe underwriters should really be kind of engaging with the tools and systems they already know and use, rather than trying to put something new in front of them, especially when efficiency and operational efficiency is the name of the game. So yeah, we talk a lot about how companies adopt AI, and I'd love to hear your philosophy on how individuals should be adopting it. How should we be thinking about this technology in our day-to-day lives?
Well, I'll pick up on that theme about the underwriters because, I agree at one hand, an organization shouldn't and never will be able to get its underwriters to shift from using the way they do business one day to sort of having to learn a whole new way of coding and using some large language model. But having said that, if I look at the people I've known over their careers and just keep going at the underwriting one, there are some people who've done very well, businesses done very well by looking at new technology. And you could go back as early as email, you can go back to spreadsheets. So I'd say, in terms of the learning, and I think this is very particularly true about how people learn what the power of, let's call it just generative AI, ChatGPT for now. When you realize what you can do yourself and the questions you've got yourself to solve a problem and see how that can help, and also limitations, then you realize, well, actually, if I have a question I want to ask to solve it, how could that be sort of baked into what we do institutionally or do every day in my business? So, one example of that might be an underwriter that wants to get information on a particular property location, and in the past, they might have had to go to Google Maps or Google View or find other ways to, or even physically get someone to go and look at the property. And then you kind of go to a ChatGPT world and you could type it in and say, tell me about this address, comes back. And then you think, well, actually, why do I even have to type it into ChatGPT? Why wouldn't that just be working in the background and just present me with information? But the point in that is that for people to see value, often you've actually got to do it yourself or try it out yourself. And then you realize, actually, there's a better way to do this. But fundamentally, I know why this is different. And I know even though I don't know the full details of what's happening in the background, I know the difference between what happened before and what happened now in terms of the access to that information and of course, the reliability of that information.
Yeah, I mean, something you said there really kind of drove that home for me, in that nowadays we think it should automatically be there, the information on a property, if you're quoting for a property risk, versus however many years in the past you might have to actually physically visit that property. There's a huge difference in, I guess, workload to achieve those two things. But the first-hand experience of visiting the property is always going to feel probably like the most authoritative source. So the question is, how can we make AI as authoritative, trustworthy, and explainable as physically seeing those things that you need to know about a property?
And also how to get access to information, because even if you've got the digital way of accessing information, is it actually there? And to your point, how up to date it is, how much can you trust it? And so still quite a long way to go, actually. There's longer than people think in terms of being able to get full digital representations of property that can be fed directly into an underwriting system.
Yeah, we hear a similar thing across various different lines of business. They all seem to have their own small or large nuance that creates maybe a bit of a challenge in terms of keeping that data up to date when it's come through AI. Like, as you say, property might be the change in climates around a certain area. An interesting one brought up from cyber with Ross Worth from CyberCube was how cyber threats can compound and they can feed off each other. Like, if there's a cyber threat that's occurred, the next one is going to be looking to, I guess, exploit the same thing that the previous threat exploited. So yeah, very interesting across different lines of business.
Yeah, and on that one, actually, nature is different than cyber. So catastrophe modeling traditionally, as I said, looking at hurricanes, looking at earthquakes, it might be severe, it might be catastrophic, but nature is not malicious. Whereas, to your point, the sort of the cyber attacker is actually always looking for ways to get into the system, and actually a completely different way of understanding how you assess the probability and the weaknesses on a more sort of nature-based risk, even albeit with the overlay of climate change and how that might change frequencies and the sort of geography of where things act or take effect.
Yeah, it seems like a totally different skill set, almost underwriting for cyber versus something like property or something that does rely on kind of climate or catastrophe data? It's aside from the kind of weather data.
But I say the fundamentals are the same. I mean, every underwriter needs to understand the balance between what they know and what they don't know, and importantly, understand what they don't know so they can go and find it and know what they can accept if they don't find it and they do decline the risk. So certainly in terms of when you get to the sort of domain expertise of cyber versus property, absolutely. But I'd say the characteristics of a good underwriter are fundamentally the same, whatever line of business that they're looking at.
Thank you. So for various reasons, the insurance industry has historically been a poor adopter of technology, especially AI. How can leaders foster a culture of calculated experimentation to move away from technological inertia, particularly with the goal of implementing at scale?
It's a comment we hear a lot about insurance companies not adopting technology. It's helpful to just take a pause and think about where is that true and where is it not true. So if we just come back to the iPhone example again, or you might be someone's laptop or other technology they're using in their personal lives or maybe in business. I bet insurers, people working in insurance are as ready to buy the next iPhone or next bit of technology as most people are. So I wouldn't say fundamentally they're against technology. The difference with insurance, of course, is a couple of things. So one is, for the most part, it's an annual cycle for insurance. And so the differences you get from being able to get results quickly or change what you're doing or change your portfolio are very different than if you're working in financial markets or sort of retail or something where you're making buying decisions many times a day. So there's just and that's not necessarily a bad thing. It's just worth remembering in terms of the sort of investment people will make in analytics, which is different because of the time period on that. There's a cycle in insurance, which sometimes the rates are very good and insurers will get what they want from the business. Other times rates are bad, and if you decline a risk because you don't like it, because you don't have the information, you won't be able to carry on trading. So there's a sort of commercial reality that overlays the sort of technology and actually often trumps the decision about technology, because you have to just take a pragmatic view as to what the market will offer you or accept when you're trading risks. So I think there are some real barriers in there, albeit I think we'd all agree that the insurance industry could do with moving faster in adoption of some technologies.
It's an interesting perspective. I mean, we often hear people attributing technology adoption down to insurance being risk averse in general, but there's obviously there's more nuance to it than that. There's the format and the frequency and cadence of their business that all plays in as well.
I would celebrate the fact that insurance understands how to assess risk. And if you look at in the financial markets, and there's actually a fascinating book I've just been reading called How Markets Fail by John Cassidy, and he talks about a lot of the financial crashes in the past. And essentially, now I'll offend anybody from the financial services listening in banks, but certainly in the past, people investing banks really had no concept of long-term risk. Anything after 100 years, they couldn't really understand. Whereas insurers, I would argue, are much better at understanding how you can get that long-term risk, how you deal with probabilities. And so I would say when an insurance company is running well and is underwriting well and managing its capital, it's actually extremely good about understanding risk and has actually far less failures of insurance companies than the banking world. So I don't think we should sort of beat people up for the risk understanding. I think there are other things to look at in terms of legacy system and challenges of changing. And frankly, also a little bit back to the catastrophe modeling world. You have, and you mentioned it yourself, if you're going to use data and analytics and technology, you've got to be really sure it's giving you the right answer, or at least you understand what the uncertainties are in the answer you're giving. Because if you're making decisions around that information, that's going to cost you a lot of money if the system and the tools and data you're using is getting it wrong.
Yeah, and I'd like to ask a couple of questions specifically about data in a couple of minutes. When it comes to making sure AI moves from being a novelty to being implemented in core systemic workflows, do you have any kind of specific guidance or thoughts that particularly carriers and insurers can apply to make sure that happens?
Absolutely, and it's a question we ask people a lot. I mean, we did a webinar last week on this, and with Zurich, and the person who's responsible there for sort of a former underwriter now sort of developing a strategy for how they use new technology, including AI in its different forms. And one of the things she does is just look where people are complaining. They've got a problem, they can't solve it, they can't get their day job done. That's when you come in and say, okay, is there a solution we can bring you using some version of AI or whatever it is? Because then you've got a receptive audience, and also the barriers to improvement are much lower, as opposed to somebody who is is okay with what they're doing, and you're trying to change, trying to rip their typewriter from them when they're already a very good typist. So I think you've got to choose where you go. The industry's also taken a while, and I think to some extent people have sort of loved the hype, but actually often the stuff that really makes a difference is boring, but it saves you money. And so what we've seen a lot in the early stages of true adoption of AI, generative AI, agentic AI, is where it's saving time and it's saving money. So a lot of, and Cytora do this, of course, a lot of extracting data from PDFs and emails and just taking that off the hand of the underwriters so they can get back to doing what they're underwriting, storing that information, triaging it so things that really shouldn't be put in front of the underwriter at all get taken away. And as you well know, you can I won't say easily, but it is possible to measure success on that. So anything where there's a demonstrable measure of real success and cost saving in particular, people will buy because you can measure that. The problem sometimes we'll get into is, and sadly human nature being what it is where people look at building tools and say, well, this will save you from all the bad things that might happen but haven't happened yet. And human nature being what it is, unless the regulators say you need to implement this, really hard to make a case for spending money on something that hasn't happened. So I think, although people might say, well, it hasn't, we haven't really seen all the exciting stuff that we think we should be able to do. We should take a lot of comfort from the fact that in the background, technology is being used to save time and help underwriters do more underwriting. And no one is seriously trying to take the underwriter totally out of the loop unless it's a very sort of heterogeneous business where everything is very similar and you can make decisions automatically as opposed to needing to have somebody review it, and make sure that what the data analytics are telling you is consistent with what real life looks like.
Yeah, it's an interesting point about human nature and I guess our view of risk as humans. There's no towns where flood defenses exist before there's been a flood. We always respond to the catastrophe. So it makes sense that kind of thinking that I guess is evolutionarily baked into us would also apply to what we're discussing. So how do you think all of this kind of creates differentiation opportunities for carriers, particularly competitive? There's a lot of competition at the moment between insurance carriers, and what do you think the facets are going to be that allow one carrier to pull ahead of the next?
Well, I mean, just building on what we said, so we talked a bit about that efficiency. There are some areas that people can just take more money up to the bottom line because they're not having frictional costs. There's a speed element in there that people don't always think about, but is quite important. The speed of analytics means that the brokers get a response faster. So if you're an insurer and you're dealing with brokers who've got choices where they can place the business, if you can get back to them more quickly, even if it's a decline, then they'll be happier to deal with you. You can take on more things in there. And, also, again, I'd say the people element to it. So if you're going to go out and employ people, and, there's a lot of, it's hard to get a job on one hand, but actually good people have got lots of choices where they go and work. If you're a company as an insurer that's offering people access to analytics and technology, giving them some space to go and do their own experimentation in a sort of safe environment, you're going to get a far better pool of talent coming into your organization, and you're also going to retain people for longer. There's still some companies that say to people, you can't use any kind of generative AI system at work. I can understand now people are saying, well, you can't use ChatGPT because it's an open model and who knows what happens to the analytics. But there are lots of tools available where that doesn't happen. They can be protected. And companies that are not allowing individuals to use generative AI tools in their own working day are just, that's not places I think a lot of people are going to want to work, particularly going into the future, with the next generation of employees.
Yeah, it sounds like a marrying the understanding of the value and importance of humans and the value and importance of technologies. Like marrying those two things in a seamless, frictionless way is going to be a real key to success going forward, probably for all industries. Definitely.
And then also you've got some companies that are strategically choosing to help and work with their clients, particularly when you kind of get into commercial side. So Liberty's doing this, AXA, Zurich, Chubb, I'm sure many others are. They're actually helping their clients reduce their own impact of risk, whether that's putting in flood warning systems or advising on construction of buildings or location. So you can see that sort of is a longer term relationship in there. Everyone benefits ultimately from that. So it's that it's that true customer engagement where the customer is not just seen as a source of premium and as somebody you have to manage the claims as low as you can, but if you can sort of support them and in some cases monetize it for that kind of consulting support for mitigation and risk protection, then that's another very strong source of growth for organizations.
Yeah, interesting. This seems like a mirror from what I spoke about last week, in the sense of an ability to be more proactive rather than reactive is kind of come into insurance and risk processing and whatnot. Instead of evaluating the risk, quoting for it, waiting for bad things to happen, we can actually get involved in the interim to further reduce the risk of catastrophes. And that's something that we're seeing in property as well. I'd love to hear a few maybe anecdotes and thoughts on that, if I could.
Yeah, I mean, one of the ones is a great example of this, I'd say, is SafeHub, which is a company out of California run by Andy Thompson. He's previously was a structural engineer, where they're deploying relatively cheap sensors onto buildings. So if the building gets shaken in an earthquake, then the building owner or the facilities manager knows whether that building has been totally destroyed, or the other extreme, had a bit of a shake, but you can still go in and use it. And you can very quickly, therefore, deploy people to the buildings that you need to. Good for protecting loss of life. And it's also starting to be used now for parametrics. So the actual the shake of the building is used as an index that can then determine whether there's a payout, because it's another alternative to the USGS, the US Geological Survey, which has traditionally been the source of data. So that's one example in there. Another one, Provisico, who I know quite well, are providing surface water flood warnings at high resolution in terms of time and location. So Donaldson Timber, one of their clients up in Scotland, they get a warning that the river's about to burst its banks, or because of the heavy rainfall, they'll move 50 forklift trucks out of the way, and they've saved themselves a large loss. So that's the kind of mitigation thing we're seeing. And then you've also got all the general surveys and things that people would do and been doing historically for building flood defenses and choosing where people build so they're not exposed to all the other things that could happen. And the other one I actually just mentioned, Jake, because we're hearing a lot about wildfire risk, and this is an interesting one, the sort of bit of tension for individuals and the choices they make. So in California in particular now, a lot of insurance companies, and I think all will ultimately demand that, this is more residential now, but I'm sure it's also going to be true of commercial, you have what's called a defensible space around your property, which means you can't have nice plants growing out the walls and on your house. You have to have sort of 3 or 4 meters of hard surface, and people now have to make choices about, do you have what is a slightly less attractive garden, or quite a lot less attractive garden, but you can get insurance for it and your house is less likely to burn down, or you still want to have the aesthetics of a very flammable garden. So you get into sort of different choices people make. Either they do discretionally, or at some point the insurance demands if they're going to continue to get insurance.
It's an interesting question, isn't it? And I think it calls back a little bit to what we discussed of the human approach to risk. I imagine many people will be opting for the more attractive, more flammable garden, and then once the worst happens, the regret sets in, and they learn from that, I guess. But that's very interesting. Thank you. And on data, we often assume that if better data is available, businesses will immediately use it to make better decisions. In your experience, is it actually that simple, or is there a friction when trying to replace old methods? And if so, how can we overcome that friction?
Well, it's definitely a cost. I mean, that's the first thing everyone's got to remember, is that if you're going to go and sell new data to somebody, either asking them to pay more, or because you're very clever, you're saying your old data set is not as good as my new one, so buy mine because your old one's not as good. And that's certainly happening. It's helpful to distinguish it between traditional business and new business. So you talked about cyber before. Cyber is still, as we sort of touched on, it's still a very new industry, not a lot of lost data, thank goodness. So very difficult to make pricing decisions based on historic information. So people that are producing data and analytics, a new way of looking at the threat, that's a brand new opportunity to make a better decision. And you can see, I mean, you mentioned CyberCube, they've done very well in this. Companies like Envelop Risk on the reinsurance side for cyber. By providing information that people can use, I think it's very similar to what it was 40 years ago when my catastrophe modeling days, 30 years ago. An insurance company can write more because they can do a better job of correlating the risk and better job of buying reinsurance and using their capital. Where it gets more difficult, though, is we talked a bit about property, but if you're going to bring new property data into an underwriter, the reality is that information is going to say two things. Either, it's oversimplifying it, but either it's going to say the price you're charging before is too high because I've told you something different about the risk and you can actually charge less, in which case I need to decide, are they willing to charge less? And if they don't, before long, their competition is going to go and do that. Or the price they're charging is too low and therefore charge more or decline it, in which case they're going to lose business. And those are really tough decisions to make, as well as, there's impacts on income. So it's much, much harder to go in with the next best sort of bit of information about whether it's a hazard risk or the physical construction of property, location of property, because if you've got that sort of threshold you need to overcome where a company has already got used to what they're using and has to make choices. And frankly, it doesn't necessarily have the budget to go and change what they're going to do. So you've really got to go and displace somebody if you're moving into that new space.
Yeah, very interesting perspective. The whole either it's going to tell you to charge less and you maybe effectively are reducing GWP by doing that, or charge more and then you're risking losing the business to competition. Even with those risks in place, what would you say the benefit is then to progressing with new data sources or better data sources? Like, is there an inherent benefit to making that decision, even though there's a risk to each side of the decision?
Absolutely. I mean, ultimately, we talked a bit about how do you liaise with your customers, incentivize them to make better decisions. So by the very fact you're getting better information, and we see it a lot in motor, in terms of decisions people make about how they drive or other things that impacts their insurance. So by having that data and, to some extent, sharing it with your client about why the price is changing, then you can influence better behavior from your clients. You can also actually often identify the ones that you probably don't want to insure anyway because there's some sort of moral hazard about their behavior. So that's good. And ultimately, the industry does need to support the best providers of data. So if there's somebody is coming up, back to sort of some things you made earlier, it's got a better source of data they sort of tap into, for example, planning permits, or building blueprints from buildings and can get more information on a building and use that in a cost-effective way, then ultimately everyone benefits from that as well. So, or of course, lots happening now in aerial imagery and being able to identify age and potential risks for a building from aerial imagery, and even back to our proximity of vegetation for wildfire. So it absolutely makes sense. And we're talking about property here, but it's across lots of different areas as well. So we certainly shouldn't give up on the data, but we should also recognize that the thresholds are really high. And one of the things that, as I observe, and if we all, you probably all sympathize with this, we think about anything we've done ourselves or made as one, I can't remember, it's one of the biases in the system. But if a company's building technology and they find a great way to get more information, the risk is they keep sort of focusing on and falling in love with their own solution because they sort of figured out how to get that information, but they kind of need to keep testing themselves with the market and say, do you want this? Are you going to pay for it? Should I be doing this, or should I actually abandon it? But one of my the best people I worked for had this great phrase where she said, that's a great idea that should never happen, which is a great way of sort of, just because something seems good, it doesn't necessarily mean you should do it, because you might not be able to sell it.
Yeah, no, that's an interesting one. Again, a little bit of an insight into humans, I think, that we're very, very goal orientated, and sometimes we set our mind to something, and even when we realize it's perhaps not the right thing to be focusing on, just because of the previous investment in that, will continue. So yeah, I guess moving from the macroscopic view on why better data, taking a more microscopic view, what specific criteria does a piece of data need to meet before professionals can actually rely on it and trust it to make a high stakes decision?
Yeah, great question. I mean, the risk of being trivial, but I would sort of say the label is, so what? What decision do I make with this? Does it make a difference? Is the value of making that decision relative to does it make sense relative to the cost of that data? So it's just a very fundamental question. Does it make a difference? And then you get into the thing we touched on before, which is how reliable is that information? And it just because something isn't completely certain doesn't mean it shouldn't be used. It just needs to provide the user with a way to say, well, I understand the uncertainty around that. Because if you take flood modeling as an example, and actually catastrophe modeling generally, for 30 years, catastrophe modeling was really more about portfolio than individual risks. So you could build a flood model that when you had 100,000 properties in it, and you wouldn't have a lot of certainty about each individual property, but you could get a pretty good understanding of your risk across 100,000 properties. But if you tried to put any one property through a model and underwrite on that property, it would just be disastrous. So there's use cases that people need to understand about how you can accept that uncertainty but the data that is just here's a number and I'm not going to tell you anything about it is very dangerous, because the likelihood is probably more uncertain than you might actually appreciate.
Interesting. Yeah. And I guess like any other commodity or any other change, it's a cost benefit analysis. As you say, it's what value does this data add? Does it still add value, even if it's not 100% accurate? And if so, what is the work and cost associated with being sure of its accuracy? And it seems like an endless relationship between those aspects that you need to have in mind.
Yeah. I mean, if you've got a building that's made of concrete blocks and is 1 story high, and it might be sitting in the path of a hurricane, but actually it's probably still insurable. Whereas clearly, a building made of something different is not, and you can sort of have some uncertainty around the construction type and the location. If you've got a building that's very robust versus a building that's very fragile, might be okay if it's 20 miles inland, but you wouldn't want to stick it on the coast. So it's very contextual as well in terms of where you need that good information. And cyber's true as well, depending on what you're insuring. If you've got a organization that is very vulnerable or is very exposed for a very public image to being hacked, then you've got to be obviously a lot more careful about that and the data you've got than one that is kind of pretty sort of anonymous and people don't really care about it too much, less likely to get hacked.
Yeah, interesting. Another universal truth then, there's nuance and context to everything, which we need to consider in every decision. Finishing on I guess a bit more of a fun question then. If you could change one thing about the insurance industry, what would it be and why?
Well, you've set the bar high about fun. I'm not quite sure I can quite achieve that. Well, I mean, I will slightly build on that a little bit. I feel that insurance, and particularly sort of London market, excess and surplus in the US, commercial, people in insurance tend to have a lot more fun than people outside insurance think, and that's not at the price of their clients, or at least shouldn't be. There's so many things about insurance that are just worth celebrating in terms of not just actually helping businesses and people go about their lives, because you're actually protecting them when bad things happen, but the communities are very strong. It brings together maths, science, human interests, all the different areas. Virtually research, knowledge, lots of things, and particularly again back to maybe London geography, but it's also it's an industry people can go into, don't like the company they work for, don't get looked after. You go across the road and you work somewhere else, but you've made friends for life in there. So I think the insurance industry doesn't. I'm surprised in a way. It sort of tries to portray itself, but it doesn't really. It doesn't really. And most of it, you can read into it, and this is true of me actually. Most people who go into insurance have got family connections in there. I didn't, but my daughter's gone into it, and that tells you something about they kind of know they know the secret of insurance. It's actually quite a good place to go and work, but it hasn't really done a good job of telling that to the rest of the world. And I think that would really be helpful, because you get a much wider range of people coming in and more talent coming in, and it's just for the benefit of all. So that'd be my thing. If we could change that, it'd be just like stop moaning about it. Don't be so shy. Tell the world what a wonderful place it is.
Lovely. Thank you. What a great note to end on. Matthew Grant, thank you so much for joining us. What a great conversation, and all the best.